here at the One-on-One Crowdfunders, and here with Howard Lionheart. Howard, welcome to One-on-One Crowdfunder, the Crowdfund Beat.
Hi, Sydney, and hi, everybody.
Well, I know you're busy. Thanks for taking your time and talking to us at this moment. Tell us the latest about what's going on with the crowdfunding. I know you're one of the earlier people that the crowdfunding phenomenon that is happening. You were at the White House at the signing, and but I'm going to go right to the point, and I always do with you, and you're straightforward with me on that. What's going on? What's happening to this, the whole Title III and a Job Act?
Well, as you know, the Jobs Act had 5 parts to it, and 4 of those parts have been implemented, but the one that perhaps is most interesting to us, the Title III, has not been fully implemented yet. The public comment period was finished on February 3rd. Normally, by tradition, after a public comment period, a law goes active 30 days later, which would have been March 3rd. And for some reason, that hasn't happened. I'm actually going with a small delegation to meet with the SEC Commissioner Gallagher on June 23rd.
So what are you guys trying to accomplish? You're meeting with the Commissioner Gallagher, you know, and that's June 23rd. What are you guys going to talk about, basically? Do you guys have any kind of agenda on that?
We are going to just express why we think it's important for Title III to be implemented, that the small companies in America in particular are starving for capital, and the accredited investor universe is not necessarily there for them. The venture capitalists are not there for them, and the angel groups are not there for them. Title II, which allows the general solicitation to accredited investors and expansion to 2,000 shareholders instead of 500 shareholders before you have to file as a public company, the SEC somehow felt that that was a big enough step to help small companies, and we certainly believe that that's not the case, that there's a diminishing pool of accredited investors in the U.S., 120-some thousand are active, but when you dissect that 120,000, you'll find out that very, very few of them have any interest in investing in startups, and very few, even less of them, would ever invest in a startup was founded by somebody they don't know personally in their circle of friends. So these accredited investors have already made their money in their life and have a good nest egg, and they're advised by their financial advisors to just make very safe investments. They're not concerned about big returns. They just want to not lose what they already got. And the only ones that invest in startups, which of course by nature is higher risk, are those that defy the advice of their financial advisors, which is a minor number. So we need Title III, which we needed on both sides, because the people that have not participated in asset ownership, the chance to be able to make a large return on an early stage investment, they need that, because they have been excluded from that opportunity. And then the small companies need access to that much larger pool of capital.
Yeah, speaking of some of those startups, then in the meantime, they went to the reward crowdfunding and they got market validation. One of them, you know, Oculus, bought out by Facebook for $2 billion. They were a startup. I saw them here in San Francisco. So it's a lot of companies are like that. You know, they are getting market validation. So they definitely will, you know, will be good for them actually go in the meantime to the equity crowdfunding. So the market is there.
Those are excellent examples, Sydney, as well as Star Citizen, which we talked about offline, which just raised $44 million. Those are examples that certain products that reach consumer markets really are situated very well for crowdfunding. Those two companies raised that money not by selling equity, but by pre-selling their product, which worked out for them, that they had a large universe of people willing to give them money up front with the promise to get the product later. But in a certain way, it was unfair to the people giving the money, that if that would have been equity in the case of Oculus or the case of Star Citizen, the people providing the money probably would have been getting a better deal. And in the case of Oculus, people have made calculations that if that would have been an equity crowd fund, the investors would have received a very 300% plus return on their equity in a pretty short time. This is precursors for the future, and it highlights that the early users of products that often are integrated with the company because they're providing valuable feedback on the beta versions, and there's oftentimes the first versions coming out have flaws, and the early users, early adopters, are really an important part of the assets of the company. And in so many cases, they do a lot of the work that allowed the company to be a success by providing early feedback, and yet they're excluded from participating in the equity gains. Well, with equity crowdfunding coming, that will now change, where early adopters can also be early investors.
Yeah, well, that's good. I know you're a very big advocate of the startup and entrepreneurship and women entrepreneurship out there. Tell us about Calyx. What is Calyx all about? I mean, I know more about it for our audience out there. What are you doing with this Calyx?
Well, there's just three clear components for Calyx. One is our Calyx Stars Business Accelerator here in Santa Monica. We have 28 companies in our 5-year accelerator, and they're evenly divided. 14 life science companies with a focus on cardiovascular and stem cell therapies, which is the area where my background is. And then the other 14 are social good impact companies, which is just a new sector of investment for our venture fund, Leonhardt Ventures. We've raised $145 million since the founding of Leonhardt Ventures, and just recently founded the Calyx Stars Business Accelerator, which is primarily up to now has been funded also by Leonhardt Ventures. We've seeded that $145 million in about 28 innovations so far, and we're advancing those forward. The other two pillars of Calyx are the Calyx Crowdfund Connect and the California Stock Exchange. Calyx Crowdfund Connect is set up to help people build their campaigns for crowdfunding, and we particularly like to work in the sector we know in cardiovascular life science and social good impact. So we basically help companies build a campaign. We have a team that makes videos, we create websites, we create marketing campaigns, and we help people that are crowdfunding to build their campaign. We don't have our own portal. We've decided to work with the many portals that are out there. We have a strong relationship with crowdfunder.com right here in Venice, California. We have a very strong relationship with Healthios Exchange and Polywog, both of which are life science focused crowdfunding portals. And Calyx Crowdfund Connect is designed to support campaigns on those sites as well as other sites. And then the big granddaddy for us is the California Stock Exchange, and we're planning to launch fully in November with somewhere between 12 and 30 social good impact stocks. Again, that will be half life science and half social good impact innovations, and we have aspirations to be the first social good impact stock exchange in the United States.
Well, speaking of California, and California, one of the states they put they're going to have a statewide intrusted, as they call it, as for crowdfunding. I think we just had Sunday went to the law in Wisconsin. What is it all about? I mean, I think the states are taking the matters in their hand. I know that California they're already putting the bill in the paper. Actually, what do you know about that?
Well, for some time, California has had an existing law called California Qualification by Permit. It does require that you have to file and get permission ahead of time from a government agency, but if you receive that permit, you can do something that is very similar to crowdfunding, and it actually has some provisions which may be viewed as being better than the federal crowdfunding law that passed November 2011. And it allows up to $5 million to be raised, while the federal limit is to $1 million. It has very similar limitations on the investors, that the investors can only invest based on their income, and lower income people can only invest a small amount. But it also takes away the provision of audited financials. So you can raise up to $5 million without audited financials. So you do have to get a permit, and you have to file a very large document, which is very similar to a 506c Title II, and you have limitations on some of the investors that you can take in, but it's a pretty good law, and it's limited to California companies offering to California investors, but it's a big state. Hey, Sydney, I lost your microphone.
All right.
Got you now.
All right. Well, thanks. I wanted to ask you about, you did some study about the portals and platforms and how it could be successful about your campaign. What did you find out? What does your study shows? How can somebody out there want to do a crowdfunding campaign to be successful?
This is something that interests everybody, and basically we've been gathering the best practices. We've been carefully analyzing the campaigns that have been successful, going back to Pebble Watch, and not just looking at crowdfunding, but also looking at public companies that have had success in crowdfunding. And just to go off a quick list, the fundamental activity that seems to be the most important thing for a successful crowdfunding campaign is to engage your initial followers group to be participants. So if you have a Facebook page or you have a network, you'll have somewhere between 40 and 150 people that are believers in what you're doing. A key to a successful crowdfunding campaign is engage those early followers to be active participants in the crowdfunding campaign. So in very simple terms, you ask the 150 closest friends and family members you have to all go out and get 3 people. It's a manageable number, and then you have to hold them accountable in a nice way, of course, because they're helping you. But you let them know that you're following what they're doing. You check on them. When they get 1, you're rooting them on to get 2 more, and when they get 2, you're asking them, well, how's it going to get 3? That seems to be the single most important thing to making a crowdfunding campaign a success. Creating a great video is an important thing. Getting out in social media is important. Getting content marketing, meaning that you write articles or you have people write articles for you, that you embed the story of your product and your campaign into the middle of the story, and you have to adapt the story to the current news flow of the day. If it's International Women's Day, you somehow make your story a women's story. If it's St. Patrick's Day, somehow you try to connect to the story of the day, which is the involving Irish people. And the more that you can get into the news and have your campaign embedded into the storyline, the better your campaign will be. And then live events seem to be very helpful, that you draw people to a live event and you capture them with the ticket price, and then when they're there, you have multiple different creative tools to extract more either donation or investment from them. All of these things seem to add up to a successful campaign. One thing that's clearly evident is, just like anything else, there's no easy road. Crowdfunding to be successful is work, and lots of work, and constant campaigning. Getting opinion leaders, or which often means people who publish major blogs that are followed in your field. Both Oculus and Star Citizen, they're an example of getting major opinion leaders in their field to blog about their campaign and about their product, and that drove a lot of attention to their very successful crowdfunding campaigns. And engaging your customers, of course. The people that are potential or are actual early customers for your product are also probably your best, most likely source for getting crowdfunding donations or investment in.
Yes, speaking of blog and all those information, we have you, and along with a lot of your articles and a lot of the other industry leaders or the crowdfunding at the Crowdfund Beat, and that's a great source for anybody out there who wants to learn about crowdfunding, wants to know knowledgeable whatever they do crowdfunding. As you know, I'm very much advocate for the business, but also for research and universities. Everybody get into that financial model of the crowdfunding. So they can go and see your conference that you were in Silicon Valley and other places actually, and some of your article at the Crowdfunding. Well, Howard, thank you very much. I'm sitting actually for Steve Sinelli, and he has the Crowd Caucus. So this is Sydney Armani and with Howard Leinhardt. Howard, any last word?
Well, I just want to express that I'm a very strong believer in the potential for crowdfunding. I believe that it has the potential to unleash the greatest asset we have in our country, which is the energy of our people. There are so many people that are out there that were like myself in my early 20s, where I really had the drive and desire and what it would take to make a business success, but I had everything but the capital. And I had to struggle very hard, and it took a lot longer to get the capital the way that I did. And in this new age with crowdfunding, I believe it's going to spur an unprecedented era of creativity and innovation and job creation. And the reason I believe in that is because I believe in the people that have everything that's necessary for success except for capital, and now they're going to be able to get some starting capital. And like Ben Franklin said, money is of a proliferative nature. It's much easier to get the second than to get the first, but the trouble is in getting the first, and crowdfunding can help with that, to get people the even 100,000, which is the lowest level of Title III crowdfunding, which does not require audited or reviewed financials. Just that 100,000 often is enough to get somebody off the ground and started in developing their business, and basically give them a chance to show what they can do. And I believe this is going to spur some incredible innovations to come forward. I'm really excited about crowdfunding, Sydney.
Thank you very much, Howard. And we are too. We appreciate your time. We appreciate what you're doing for crowdfunding and businesses in general. You know, you're an entrepreneur. We're inspiring, and we appreciate your time.
Thank you very much, Sydney, and I appreciate having the time today. And bye, everybody. Just see you in the crowdfunding world.
Thank you. Bye-bye. This is Sydney Armani with the Crowdfund Beat, sitting for Steve Sinelli, saying good night.